Hey folks, I'm Cantu at HowMuchYouFinance.com, and today we're back here with Markwei Boye. How are you, sir?
I'm doing great. How about you?
I'm doing great too, and we got some really great questions here for tax season. I'm an independent business owner, and you know, I'm thinking about branching out my services and doing some video production, maybe get some new equipment. And as I'm expanding my business in the state of Michigan, what kind of things do I need to know about? And can I write certain things off, a new purchase for equipment? Or if I'm expanding, if I want to add an addition to my business, what kind of things should I watch out for?
Well, very good question, and I will try to make it as simple as I can make it so that you don't have to ask me this question ever again. And
all right.
By the way, all your equipments are deductible, but in the eyes of the IRS, you have to depreciate those equipment. That means you cannot write all of them off in 1 year. You have to depreciate them over the life of that equipment, which is typically 5 years. However, if you want to write all of them off, you can, but you have to elect a special program called Section 179. And if you do a Section 179 election, then you can write all of them off in 1 year instead of depreciated. Now, if you are a small business owner, like yourself, like myself, and you want to know what can you write off or not write off, there are 3 fundamental principles that you need to know. And if you know those 3 principles, then you know what that is deductible or not. And that is, 1, the expense has to be ordinary. Ordinary means that it has to be common in your line of business. And if it's common in your line of business, then it is deductible. So let me give you a good example regarding ordinary. He is an internet guru. I call myself a tax guru. Now, if both of us write off a sewing machine on our taxes, the government know we're crazy, because sewing machine is not ordinary in our line of business, but it's common in whose business? A seamstress or a tailor. So it's not ordinary, because if they write it off, it's ordinary. So if the expense is ordinary in your line of business, then it is deductible. 2, the expense has to be necessary or helpful. Hey, in order for him to be able to function effectively, he needs to have a video camera. He needs to have maybe a tripod, all those things that he needs to function. If he buys all those things in order for him to be able to function his business, all those expenses are necessary, and if they are necessary, it is deductible. 3, they have to be reasonable. What do they mean by reasonable? Reasonable means that don't go over the top. And if you go over the top, the government says that's too much, tame it down a little bit. So 3 basic things you need to know. It has to be ordinary. If it's ordinary, it's deductible. If it's necessary, it is deductible. If it's helpful, it's deductible. And if it's reasonable, it's deductible. Okay, that's all you need to know. And if you know this, you know what you can write off or not write off.
Okay, so
just that simple.
So no commercial laundry machines in my future?
No.
Okay, just checking. All right, and to find out more information, where can we go?
Just call me on my phone at 248-395-3388, or you can contact me via the web at www.smartbusinessPLLC.com.
Thanks for watching, folks. We'll see you on later. When we come back, Markwei Boye is going to talk to Tracy Vickay about amended returns. Don't miss it.
Hi, Tracy Vickay here with Markwei Boye of Smart Business Tax Solutions, PLLC. And this is a very unique opportunity. We're going to learn some more information. So thankful to have a licensed IRS enrolled agent here, one of only 5,000 in the country, by the way. So tremendous resource, especially in the middle of the 2009 tax reporting season. So now tell us, I'm sure there are many, many individuals and businesses out there who are faced with some maybe tax errors or things that got missed, things forgotten, and they're up against the opportunity to maybe file an amended return. So do you have any words of encouragement for these people who are afraid maybe they're going to be raising some red flags and making themselves a target for the IRS to audit them?
Well, thanks for the question. Quite frankly, that is not the case when it comes to red flag relating to amended returns. Amended return is within the law, and the law is very clear on that. And the law states and stipulates that you have 3 years to file an amended return if you miss something very valuable that can make a difference on your tax return. Now, so you might not have reported all your income, or you did not report all your charitable contribution, or you reported your property taxes, but you only reported for the summer, you did not report for the winter. Now, all those are deductible expenses that will have an impact on your tax return. Well, because the government can change anything that you do wrong, they give you the same privilege if you make a mistake for you to change it and get what it do you.
Okay.
So, if you find anything on your tax return that is inaccurate, you are required by law to file an amended return and fix that problem. Again, you have 3 years to do so. Now, what most people fail to realize is when you file an amended return, you can either get a refund or you could possibly owe them more money. For example, if you did not report all your income, then if you add more income to the amended return, there's a possibility that you might get a refund or you might even owe money.
Okay.
On the flip side, if you did not report all your expenses, which will reduce your taxable income, and for that matter, reduce your taxes that you pay, then if you file an amended return, you're going to get a refund. But it is within the law for you to file an amended return if there is something wrong with your return. That necessarily does not mean you'll be picked for an audit.
Good.
And the reason why I say that is because if you have a legitimate deduction and you have the documents to back it up, there is no point of getting afraid, because if they come, you will be able to prove your point. So amended return is not supposed to scare somebody or to raise a red flag. That is just a myth.
Okay, that's really good to know, because there is more education and awareness with the use of the internet, and more people are utilizing resources like the videos that we're doing here today to really understand what they're entitled to, and that it is a resource that's available to them. People are more informed, and it is available not only to businesses but individuals as well.
Absolutely. And again, it is within your right to file an amended return, so long as the amended return is not fraudulent to get a refund. You should not be worried about raising a red flag, because it is within your right to file an amended return within the 3-year period.
Okay, all right. And when in doubt, seek counsel from a professional such as Markwei Boye, and he'll ensure that with his signature on the tax return, everything is done within the law, presented completely and accurately. And yeah, I'd just like to thank you again. People out there probably will be interested in getting in touch if there are any questions.
For more information about Smart Business PLLC, contact Markwei Boye and the professionals at 248-395-33